You felt it too, haven't you? You open your portfolio, scan the markets, and there it is again. Bitcoin's dancing wildly, Ethereum's making headlines, and some random meme token nobody's heard of just exploded 500% in 12 hours. But then your eyes drift to XRP, glance at HBAR, and you witness silence. A sluggish, methodical, sideways movement that's downright maddening, even soul-crushing. For countless months, holders have listened to promises about revolutionary technology, massive corporate alliances, and earth-shattering potential. So the burning question that reverberates through Twitter feeds, across Telegram groups, and in the hearts of millions of investors is, if these platforms are truly game-changing, why are they so eerily silent? Buckle up, because what if I revealed that this silence, this seeming absence of explosive mainstream attention, isn't weakness at all? What if I showed you it's actually evidence of something far more significant, far more transformative brewing just out of sight? What if that stillness is genuinely masking the largest institutional accumulation and strategic deployment phase these assets have ever experienced? Today, we're lifting the veil. We're exposing the genuine reason behind XRP and HBAR's deafening quiet. And the reality, the absolute reality of what's unfolding while everyone else chases shiny distractions, I guarantee will blow your mind. This isn't hype talk. This is about the fundamental reconstruction of global financial infrastructure, and it's happening in complete stealth mode. Stay with me because what you're about to discover will permanently transform how you perceive these two digital powerhouses. Let's dive into XRP first. For anyone who's held long-term, the price movement feels like a riddle. On one side, you've got the headlines, the groundbreaking SEC resolution delivering unmatched regulatory certainty in America, the continuously growing roster of RippleNet collaborators, and the relentless evidence of its dominance in international payments. On the flip side, you've got price charts that have, during extended stretches, appeared stubbornly immune to these positive developments. This gap creates endless frustration. But here's the secret. It's also where the magic lies. The reality is XRP isn't designed for retail-fueled price explosions. It's being systematically and intentionally woven into the fundamental infrastructure of worldwide financial systems. A transformation that occurs not on public trading platforms, but in corporate boardrooms, regulatory testing environments, and behind the secure networks of the planet's most powerful banks. What you're interpreting as silence is actually the symphony of deep institutional integration happening off-market. While day traders obsess over candlestick patterns, Ripple's playing an infinitely bigger game. Consider their strategic purchase of Medico, a Switzerland-based pioneer in institutional digital asset custody. This wasn't merely another acquisition. It was a masterstroke that equipped Ripple with the critical infrastructure to enable conservative, heavily regulated financial institutions in jurisdictions like Switzerland to store, manage, and transfer tokenized assets, including XRP, seamlessly. This single move eliminated one of the most significant barriers to institutional adoption: compliant, bulletproof custody. Major banks don't purchase their holdings on retail platforms. They utilize institutional-grade custodians like Medico. Ripple now controls one of the finest. This represents foundational positioning, but it doesn't trigger immediate price spikes. It's silent, calculated, and monumentally important for long-term institutional capital flows. Moreover, examine the on-chain analytics if you understand how to interpret them properly. The enormous XRP movements that trigger whale alerts are frequently misread. The recent transfer of over $22 million in XRP wasn't a whale preparing to dump on retail investors. Deeper investigation shows it was a transfer between recognized institutional custody addresses and Ripple's operational wallets, likely provisioning liquidity for a new on-demand liquidity (ODL) corridor. This represents genuine utility in action. It's value movement facilitating cross-border settlements for major clients. This isn't speculation, it's operational reality. The market barely reacts because it's not speculative trading. But for those who comprehend, it's a powerful indicator of expanding network utilization. Ripple's partnerships are similarly misunderstood. People anticipate flashy announcements with major American banks, but the real progress is quieter. It's pilot programs with entities connected to the bank for international settlements, BIS, the central bank of central banks. It's advisory positions with finance ministries across the Middle East and Asia. It's successful cross-border payment tests in developing markets that validate the technology under real-world pressure. These developments don't generate social media buzz because they're often bound by confidentiality agreements and represent lengthy, methodical integration processes. Ripple isn't attempting to inflate prices with partnership announcements. They're becoming the underlying settlement infrastructure for their partners' entire cross-border operations. That's a much deeper, quieter, and ultimately more valuable pursuit. With the SEC's settlement now complete, this process is accelerating domestically. The private discussions that were occurring behind closed doors with American financial institutions, who were legally restricted from fully engaging with XRP, have transformed into active integration initiatives. The silence you're experiencing is the calm preceding the storm of official, production-level launches from US-based banks and payment processors. They won't broadcast their every move. They'll simply activate their systems when ready. The shocking reality about XRP's quietness is this: it's the sound of professional execution. It's NDAs being executed, compliance frameworks being constructed, liquidity corridors being established, and institutional-grade infrastructure being assembled piece by careful piece. While retail markets seek fireworks, Ripple's constructing a global financial superhighway in the shadows. The excitement will emerge, but only after the groundwork is complete, when trillions in transaction volume begin flowing through these new channels. Now, let's translate this fundamental silence into what we're observing on the charts, because the technical analysis tells the identical story as the institutional maneuvering. Currently, as of June 2025, XRP is consolidating between $2.19 and $2.30. To impatient or inexperienced eyes, this appears like stagnation, a tedious sideways drift. But to experienced technical analysts, this represents one of the most thrilling and powerful chart formations possible. This isn't weakness. This is the textbook definition of compressed energy, a market storing tremendous force within a tight consolidation before a massive, explosive breakout. Let's break this down. First, examine the support levels. The previous all-time high has been conquered, and now the area above $2 functions as solid ground. Every dip below $2.20 gets bought immediately with higher volume on rebounds than sell-offs. This indicates buyers are aggressively protecting these levels, absorbing any selling pressure. This isn't weakness, it's smart money positioning, patiently accumulating every token available in this range. It's like a pressure vessel systematically building force, with support acting as reinforcement, channeling pressure upward. Now let's examine key indicators. The Bollinger Bands on weekly charts have been contracting for weeks. For those unfamiliar, Bollinger Bands measure volatility. When they compress like this, it signals massively suppressed volatility. This is rare and powerful. Historically, extended Bollinger Band compression almost always resolves through violent price expansion. Energy can't stay contained forever. Remember late 2017? XRP experienced similar multi-week compression before launching into a nearly vertical, life-altering rally. That wasn't random, it was market physics. We're witnessing identical technical precursors now, but this time backed by full regulatory clarity, something absent in 2017. The futures market reveals an even more compelling narrative. We're seeing steady, methodical increases in open interest. This means more capital is flowing into XRP derivatives, with sophisticated players making long-term directional bets. Critically, this open interest growth occurs while prices remain stable. This is classic bullish divergence, signaling institutions and large traders are building positions quietly without chasing prices higher. They're setting the stage. When major price expansion occurs, this accumulated open interest will act like rocket fuel, amplifying moves through short squeezes and leveraged momentum. Furthermore, examine on-chain data, the digital fingerprints. As discussed, exchange reserves are plummeting. This is perhaps the most bullish long-term metric possible. It means holders aren't keeping XRP on exchanges for easy selling. They're transferring to cold storage, signaling strong conviction for much higher prices. Simultaneously, data shows large balance holders, the so-called whales, have maintained consistent net accumulation for 90 days. This isn't chaotic retail buying. This is patient, methodical positioning by players who move before crowds realize the train's departing. The shocking truth from charts is this: XRP's price quietness is technical camouflage. It's concealing one of the most potent bullish consolidation patterns in crypto. The combination of strong support, contracting volatility, Bollinger Band compression, rising open interest, and massive on-chain accumulation points to one high-probability outcome: violent, sustained breakout. The spring is coiled to its absolute limit. The only question is which catalyst will finally release it. Now let's focus on HBAR, because if XRP's quietness is misunderstood, HBAR's silence is on another level entirely. Trading around $0.17 with apparently declining speculative volume, it's easy for retail markets to dismiss it as a project that's lost steam, faded from spotlight, and been abandoned by latest hype cycles. At surface level, it looks like weakness. But zoom out and adopt a truly institutional long-term perspective, and you realize you're not witnessing a crash. You're not seeing capitulation, you're witnessing deliberate and surgical noise elimination. The speculative short-term traders who chase quick doubles and follow social media trends have largely abandoned HBAR because it doesn't provide instant gratification. What remains is pure concentrated signal. Current holders and accumulators are predominantly institutions, enterprise developers, and long-term strategists who understand what Hedera is actually building and why its governance model is its ultimate competitive advantage. This isn't price collapse, it's profound narrative reset. When volume evaporates in speculative meme coins, it's typically the beginning of the end. But when it happens in a protocol with deep enterprise foundations, unique patented technology like hash graph consensus, and a governing council that's literally a Fortune 500 who's who, it signals the beginning of deep strategic repositioning. Players holding HBAR now aren't here for weekend pumps. They're here to own foundational infrastructure before the global enterprise revolution begins. That means playing the extremely long game. The speculative volume decline isn't bearish, it's intentional. Hedera's quietly filtering out noise traders and clearing space for infrastructure-level participants. We're not discussing individual wallets gambling on price spikes. We're talking about multinational corporations, governments, and global consortiums integrating Web3 technology into real-world high-stakes operations. Significant HBAR activity isn't found on retail exchange order books. It's happening in off-exchange private transactions, node operator agreements, and architecture of large-scale enterprise deployments. These integrations, forming the backbone of future adoption, don't appear on retail volume charts. HBR isn't competing with meme coins or igniting short-term FOMO. It's building something fundamentally different and far more ambitious. A permissioned enterprise-grade Layer 1 network designed for unparalleled performance, ironclad regulatory compliance, and sustainable long-term viability. Look no further than the Hedera Governing Council, a lineup of global enterprise titans including Google, IBM, Boeing, Dell, LG, Standard Bank, Ubisoft, and many more. These aren't superficial PR partnerships for price pumping. These are active, invested stakeholders who are legally and financially committed. They operate validator nodes, shape network governance, and most importantly, actively deploy the technology in critical real-world applications across dozens of industries, from finance to aviation to supply chain management. The underlying technology, the hashgraph consensus algorithm, is absolutely revolutionary. It provides asynchronous Byzantine fault tolerance (ABFT), mathematically the highest possible security level for distributed ledgers. This translates to ultra-low latency and transaction finality in seconds, not minutes or hours. This performance level isn't just impressive theoretically, it's absolutely essential for serious enterprise applications. Whether tokenizing trillions in real-world assets, managing complex, compliant supply chains for pharmaceuticals where data integrity means life or death, or executing millions of daily microtransactions with legal oversight, speed, security, and reliability aren't optional. They're critical requirements. Behind the scenes, smart money recognizes what's happening. The Hedera Foundation's silent but strategic expansion into highly regulated jurisdictions and laser focus on enterprise-grade applications, like the Guardian platform for verifiable ESG data tracking or DLA Piper's Toko platform for legal-grade tokenization, reveal strategic positioning that completely bypasses retail radar. This isn't weakness, it's strategic silence. It's the quiet confidence that typically precedes game-changing announcements and massive adoption waves. The shocking truth is HBAR is quiet because its target audience, global enterprises and governments, don't operate on hype. They operate on performance, security, and compliance. In those metrics, Hedera is building an undeniable advantage. As global regulators from America to Europe to Asia continue tightening restrictions on purely speculative crypto assets and cracking down on reckless speculation from past cycles, one thing becomes crystal clear. The next great bull cycle, defined by serious institutional capital entry, won't be about hype tokens or viral pumps. It'll be dominated by projects offering demonstrable real-world utility, robust compliance frameworks, and deep institutional alignment. Right now in June 2025, XRP and HBAR aren't just ahead of this curve. They're actively constructing the very highway institutional finance will travel. Both share crucial, powerful characteristics that distinguish them from the vast ocean of speculative altcoins. They have compliance embedded in their DNA. They possess incredibly scalable technology capable of supporting massive global transactional throughput. And they're being adopted by serious global organizations that don't chase fleeting hype cycles. They operate on long-term vision, strategic necessity, and rigorous due diligence. This precisely explains why XRP's price action often moves with controlled, institutional precision, and why HBAR's growth appears so deliberate and measured. This isn't retail-driven chaos, it's calm, methodical execution of infrastructure-driven foundational construction. Examine XRP closely. It's not just a crypto token. It's fuel powering real-time, low-cost settlements across global payment networks, reducing financial friction and liberating trillions in trapped capital where traditional finance has struggled for decades. From cross-border remittances in Southeast Asia to tokenized real estate pilots in Europe and commodity trading platforms in the Middle East, XRP is quietly moving billions in value, facilitating liquidity where it's desperately needed. With the landmark SEC settlement providing clear, unobstructed pathways in America, these aren't speculative use cases anymore. They're live, rapidly expanding deployments with active partners driving genuine, measurable, and now fully compliant utility. Meanwhile, HBAR is quietly becoming the trusted ledger for the world's largest enterprises. It's running government-backed public registries, enabling verifiable ESG data tracking for major corporations meeting new climate regulations, and powering permissioned enterprise chains demanding absolute highest standards of security, performance, and compliance. Hedera's unique enterprise-grade architecture is unlocking possibilities in heavily regulated sectors like supply chain logistics, healthcare data management, and burgeoning carbon credit markets. It's methodically tackling trillion-dollar industries, not by chasing headlines, but by earning institutional trust through superior performance and one-of-a-kind governance. This focus on verifiable data and auditable transactions is precisely what the next, more mature enterprise blockchain phase demands. This foundational work doesn't grab daily headlines or generate viral social media buzz, but it's what moves entire markets over time. The stage is being meticulously prepared for massive crypto capital rotation, a great shift away from noise-driven speculation into networks actually solving real-world problems that institutional investors, multinational corporations, and global regulators deeply care about. As regulatory clarity becomes the new global standard, projects like XRP and HBAR won't just survive, they'll thrive. Not despite regulation, but because of it. Their compliance-first approach and enterprise-ready governance models mean they're already aligned with stringent rules institutions must follow. That positions them perfectly when traditional finance finally embraces tokenization and decentralized infrastructure at scale. When the next wave arrives, and it's coming, the race won't be about who can shout loudest on social media or pump fastest on retail exchanges. It'll be about which networks can actually deliver on promises of security, scalability, and compliance under institutional-level scrutiny. XRP is becoming the backbone of global liquidity networks. HBR is laying secure, trusted rails for the next phase of tokenized business, sustainable finance, and compliant digital assets. Both are quietly preparing for that moment. The only question now is, are you paying attention before the explosion? So, what's the real shocking truth behind why XRP and HBR have been so quiet? It's because they're playing an entirely different game than 99% of the crypto market. While everyone else chases short-term price pumps, XRP and HBAR have been systematically integrating into the core of global enterprise and financial systems. Their customers aren't retail traders. They're central banks, Fortune 500 companies, and global regulators. Their deals are forged in boardrooms, not on social media. This quietness isn't weakness. It's the sound of professional, high-stakes execution. This creates the great capital rotation away from hype toward real utility. The shocking truth is simply that the most important work in building finance's future is happening in silence. This provides a massive investor's edge for those who can see it. While others chase noise, you have the opportunity to follow smart money into tomorrow's foundational infrastructure. XRP and HBR aren't just making noise, they're making critical moves. And the time to pay attention is now, before the quiet giants finally begin to roar. If your mind is spinning from what this all means, if you finally see the real game being played behind the scenes with XRP and HBAR, then you need to be part of this community. Don't wait to get informed. Smash that like button right now if this analysis opened your eyes to what's really happening while everyone else is distracted by the noise. Hit that subscribe button, and most importantly, ring that notification bell, because the next major signal from these sleeping giants could be the one that changes everything. And you'll want to be first to know, not last to react. We don't follow the hype. We decode the real moves. The great rotation is happening. Stay ahead. Stay smart.